One thing I want to show you guys on EURUSD right here, which is something I want to feature more um, as far as the power of these types of opportunities. If you guys have the assistant, I don't know how many of you guys are actually using it or not. And this tool is not something, for those of you that are new, it's not just a plug and play, tell me when to buy, tell me when to sell tool. You have to know the methodology, reasonably well to get the most out of this tool, because it's showing you, it's alerting you of specific situations in the market that you find that you trade well. Like if you trade off liquidity lines well, like let's say you just want to trade off liquidity lines in trend. I have guys that do that. They literally set buy orders or sell orders at existing liquidity lines and just let the market trigger them into the trend. Obviously they do it in trend. Like if the overall trend on their higher time frame is for sure going up, they just park those buy orders at liquidity lines and literally just let the market tag them in and average their position based off that. I got guys that do that, or I got guys that trade off single liquidity lines, or they'll trade the expansion index or the major expansion stack. That's what you have all these triggers here for. But one of the simple ones is a liquidity line signal on a grade A. This is a great setup right here for a very simple and effective, putting you into simple, effective situations where you can have generally low risk and high potential reward on this situation. And the EURUSD had a great opportunity on Sunday that I want to show you guys when the trigger. But right now, I have it set with the entry time frame is the 30 minute all the way across the board. Just have it set on all these pairs just to generate a lot of different grade A signals. But the entry time frame, I had it set on the minute 30. You can see I have EURUSD right here, and I want to show you kind of what a great grade A setup looks like. A grade A is going to be the very first trigger on a new candle color confirmation. So essentially what this is trying to do is tell you basically, hey, your higher time frame is turning on TF1. And if you don't have TF2 or TF3 turned on, then it's not going to look at these, because then it would have to be your TF1 would have to be turning in alignment with TF2 and TF3, possibly, if you have them both enabled. So you have all these three aligned. But if you don't have those, then it's going to look at both long, short, first candle on TF1 for the grade A. So what this is set up is a grade A on the 30 minute, the very first counter trend liquidity line that's hit after a new candle color close on the daily. That's what this means right here with this basic setup. And you can see this is a very, very simple setup. One trigger, one grade A. I only want to see the first opportunities. So this one triggered Sunday afternoon, or at least Sunday afternoon for me. I know some of you guys, this was Monday morning. So during this day, it's looking at the color of this candle on TF1. So what is the first short opportunity based off of a liquidity line trigger? And I'll show you. That's not working very good. Okay. Right there. That is your first opportunity right there. That was a grade A signal. If you look at the date on this candle, this started on 4/4. And you look at my charts right here, 4/1, 4/4 started right here on this candle, or right here. Went up, boom. There's your signal. The moment we hit that liquidity line, that is a grade A, because it's the first confirmed rotation, first counter trend liquidity line. So now what does a liquidity line mean? A liquidity line, these are put at swing high and swing low points based off of major framework expansions. What those represent are ultimate pain points for people trading associated to this neutral zone of value. So people that shorted right here, they went short on these candles at the market open, their ultimate pain point would be referenced based on the swing high point right here. And that's why there's a liquidity line there. So as the market goes up, people that went short, they're feeling pain, boom, they get out. And like I said, we don't know exactly the price level. These are just based off of general how the market behaves based on the architecture. So these liquidity lines represent a possible cloud of stop losses, or even if someone's not running a stop loss, this is just a place where if you shorted down here, you're going to be highly uncomfortable up here and want to close your position, regardless if you have a stop loss or not. That's what was happening. So if people sold right here or shorted, What are they trying to do up here? They're trying to close out the trade. So they're going to have to buy back into the market, right? Also, in addition to that, as we break through these highs right here, the previous high, what also happens? You have breakout traders starting to buy the market thinking we're coming back up, right? So what you end up with is a cluster of buy liquidity from 1, people losing money, 2, people opening new positions because they think that this is a new breakout, okay? As that happens, especially the people with the new positions buying up here, where's their ultimate pain point? Down here, based on the swing low point referenced by the neutral zone of value. That's why we have a liquidity line there as well. So that's going to be, as the market, you see it came back down, it went through that liquidity line, and then that one, it just fell through, had a little pause, and then broke through and furthered the trend, right? So anyway, that's how the liquidity lines work. But when you get a grade A signal and you have a program that I want the first liquidity line on the first rotation based on my TF1, these are the kinds of situations that you're looking for right here. Whether you short the immediate second you hit the liquidity line is up to you. What you know is that you're in a general range, and what would you be looking for? You gotta the ATS is all about asking questions about the situations. What would you be looking for with this liquidity line interaction if you were going to try to control risk tight off of it? Well, you'd probably want to see a reaction. We had a quick reaction right here on this first candle, right? It did come back up, which is very common. And we had kind of a range, kind of went into a little bit of an accumulation here. And this can happen when you have people trying to buy the breakout and smart money's taking the other side of that range or the other side of those trades. So people buy, they sell, they sell, they sell, they sell. So they can hide a rather big sell position in this range by keep taking the short side, short side, short side until they force it down here. They know that there's liquidity down here to sell into, and that starts kind of that profit taking trend phase. So anyway, that's getting a little more into the nitty gritty of how that all works. But anyway, what I'm saying is you want to be alerted of these types of situations because 1, they're early to a new rotation. You're early. So timing is everything when you're trying to time the market and not just value investing. So timing combined with a circumstance that allows you to ask some questions about what am I expecting here? What am I expecting? What type of behavior would indicate that this daily is going to hold and keep going down to some degree and put you in the money? And this is the kind of behavior that's ideal. In this situation, you can short and control your risk rather tight. And then guess what? If it takes off, you're at the beginning of a possible daily rotation. And then it puts you into moves potentially like this. And then in that case, especially if you catch this one down, you've earned the right to do all kinds of things. You could let it ride. You could take your profit. You could do whatever you want to do because you're significantly in the money. You can even start riding multi-day trends if you think that that's a possibility. Anyway, I love the grade A signal just because it's a strong entry combined with early timing. Now, do they all work out like this? No. But let's say this failed. What would end up happening? Well, we could probably come back up to this expansion line. You'd probably take a small loss right here. And then next thing you know, the daily would possibly going back blue. In that case, you took the one trade, you sit on your hands. Oh, well, wait for a brand new grade A signal because the ones that do work are usually pretty massive.